9/3/2012, 10:30 a.m. Pacific Standard Time, Labor Day. How about that? Happy Labor Day to everyone. I do know that tomorrow morning is going to be Tuesday and we have 4 trading days and it's going to be a light trading week still, but it changes the calendar month to September with major headlines coming out. And what I have here is an Apple weekly chart. I have a Google weekly and Apple both. Here's the Google, here's the Apple, and over here I'll show you. This is called the Nasdaq Composite. What is a Nasdaq Composite? This is the Nasdaq Composite right here, up 18.25, along with the Nasdaq 100 up 18.5. What I'm going to show is that the calendar high reversals, once again in the Nasdaq Composite, have a reversal. You can see that here the Apple is the major player of this weekly reversal on the Nasdaq Composite. What I am going to tell people that if Apple continues its weekly reversal and starts to break down below this trend line that I have drawn right here, which is half of that weekly bar, and if Apple was to continue to sell down here, that means that the Nasdaq Composite would be dropped down. And if we were to drop down to around 650, 655 area right in here, that's going to be a support area. And the reason why I say that is because it's the low end of that week before we made that 52-week high. And not only that, we closed up toward the weekly high and this lower high held. So basically that's going to be the support level for us here. Now, the reason why I'm showing the two together is because Apple Computer pulls back. Even though they're releasing the new iPhone, then the Nasdaq Composite and other broader equities will pull back as well. If Apple continues to go higher in 52-week highs, then this Nasdaq Composite is going to continue to consolidate at or near its 52-week highs and could break higher very easily. This is a calendar reversal, yearly reversal in the composite. This is at support level here. This is where the bases were. This is the dog days of summer and the dog days of August with a slight negative bar. Is it that you want to call it a total correction yet? No. However, we will start higher volatility in both directional price movements in the month of September and moving forward, meaning that both the long side to the upside will have its price volatility. However, the resistance levels in broader equities and indexes will hit those resistance areas at each next higher high. However, the price volatility on the downside will increase and be much higher in value than what you've seen in August and what you've seen in July and August both. That both sides of the market will have a lot of price volatility, and price volatility only increases at 52-week highs or when you're getting ready to make 52-week highs. That is when the price volatility will happen. One of the things that we're going to do, now that you can see that this is a Nasdaq Composite, we're going to go back to this and we're going to compare Google with Apple on a weekly level. And you can see the differences here: 1 week, 2 weeks, 3 weeks, 4 weeks. Here's a fifth narrow range week. But when this thing held that half weekly bar slightly right above it, we continued to go up in narrow range. But we can look at that weekly breakout, back down to the half weekly support, and close and look at the series of 52-week highs that occurred here. So basically, look at where Apple's 52-week highs had occurred on the same level: 1 week, 2 weeks, 3 weeks, 4 weeks, starting here, going through these different levels and support levels. But look at how it comes down and hits support. That is normal for equities to do. Price volatility would increase in equities across the board, and the Nasdaq Composite and the Nasdaq 100 right here. That the price volatility to resistance, you would have reversals in price volatility, and that both sides, the long side of the market, that's the upside. However, you start to see where the reversals start to come into the marketplace. This will also be a very big factor in how we buy calls and puts over here on Google. That's a 685 put. That is a weekly 9.7. And Google has been stronger than Apple. Usually what would happen is every time that Google hits a 52-week high, it drops a good $35 to $50. We're not getting that, but normally this would be Google and this would be Apple continuing. So what we have here is a weekly distribution on Apple, but an upside still in the name here in Google from the bottom up. And the price volatility in both sides of these names in the call and the put structure, the 680 call, that's a weekly one, and I'm showing next week. But you can see that it had a trade from $7 up to $11.52 and $11.52 closing. They were closing in an elevated price level. You can see the put options also had great trades. They got down here to, let's just call this $4.29. But look at the range. You had a $4.80 range here on the put, and on the call, you also had a $4 range. That means that when this thing, Google, is bouncing off support, when the calls hit the bottom, they make big trades. 10 contracts, take your $2, $3, that's $2,000 or $3,000 here. But on the other side of the matter, when Google is having a resistance level at a 52-week high right here, and then you can see the range here was $8.54 in the name on Friday. This is Friday's print. However, you can see here in the weekly, which has only been open 2 days, it's a weekly contract. It'll expire this coming Friday, and it's a 4-day trading. But you can see that it had a great move because even though that they still marked it down $3 on the close, it had a trade from the bottom up. So let's say you're getting our wholesale prices at 4.5, and you're getting out up here at $7, $7.50 on 10 contracts. You're making the same amount of money here as you did right here off of the bottom here, based on both intraday directional price movement equals price volatility increases. Therefore, you start to see where the markets start to get weighted just from an electronic buy side tape. But we're going to be looking for what the September volume is going to be tomorrow. And we're going to be taking a look at how the put to call ratio and what these indexes are going to do in the month of September. And can they keep this rally moving or not? Now, let's go back to the comparison again. The weekly chart right here. This is Apple. In order, this side of the market on the call is going to work no matter what. But they may not work as big as they were working in price movement. Maybe this side is where they start closing. You get hit wholesale down here, but they close up $3. Yes, everything is tradable intraday. So what we're going to be watching is where Google starts to act like Apple did. And if we start and continue to sell into 52-week high at resistance levels, then that means one thing. If we drop down to support, we will buy the call because the stock is going to bounce, challenge, or slightly below the 52-week high. That would take the call value up. You'll sell it immediately. Then what would happen if the market's going to change, and this trend does change? We don't know until tomorrow. Right now, it's the best bull one out here on a weekly level that I can find. One of the best. But I will tell you that they will drop these bids down, and this side of the market would pay because you would sell into resistance here. That would create the low print here, and then they're going to move $2 to $3 on 10 contracts, and that equals $2,000 to $3,000. Now, let's just say, as an MMT, if you pulling out $2,000 a day, only getting 1,000 here and 1,000 here, but times 5 days in a row, that's $10,000 in a week. I will leave it in the fact that we will be watching this trade relative to the call and put ratio. And in the next video, which is going to be the opposite, if Apple wants to come down and bounce, meaning that we could travel up higher on the call side here off support levels in Apple, and the put side over here could be working in greater value. They could change hands where you're bouncing off support, but you're coming down to test. It just depends on what tomorrow morning brings. We'll know beyond a reasonable doubt. Once again, I'm giving my MMTs live. The weekly analysis here and the weekly analysis between the two names. I'm incorporating a 680 call, and I'll even go beyond that, is that I do have the 690 put here that had a $7.30 low and traded up to $12. They were $12 down. They ended up closing at 8.5. It doesn't matter. There was a $3 move here in that 690 put. 10 contracts there is $3,000. Over here, when we were buying that 675 call, they got down to $10. They were on the high 15, but they still got marked up $2.46. So the call side was marked up on Friday's close, and we're going into September, and the put side was marked down. And between Apple and here's the Google weekly chart, it is bull, but let me tell you, it's overbought. So that means that each high price volatility will increase in Google. And back to this Apple as comparison, is that price volatility already started in this name here, $11.35 range on Friday. And yes, it did. And we got to making the 52-week highs, but 52-week highs have reversal volatility because they're that much more overbought. And what they do is they make good trades at exhaustion price resistance levels. Because in the next video with my MMTs, we'll be doing a complete 660 weekly call. And we'll be doing the put side as well. The 680 puts, we'll be putting the weeklies in there so we can look forward to that, because if this name wants to bounce off support, this has got a good range on that call, $6.40. That'll be the next one that we do, starting the month of September out with the best of the performing of the breed, both the Apple, both the Google, both understanding where the Nasdaq composite is right here, up toward its 52-week high range. We've already said in different analysis with our MMTs, you can break back up here to 3150 and back up below 3200. It's not out of the ordinary. It just depends on what the work week is going to want to do tomorrow. You have all the news coming out of Europe and everything, but I will tell you when it comes to making money in the month of September, that price volatility will increase in the broader market and in broader price ranges and both directional price movements. And I'm saying this on 9/3 of 2012 before the trading day kicks off in the morning.